Hello and welcome. The title of my today's lecture is The Art of Trading Breakouts, Cup with Handle Breakouts. Now this is part of my series on trading breakouts, and today you're going to learn an effective breakout trading strategy for profitable results. Now here's a preview of what you will learn. You will learn about a pattern that is very reliable and where you can buy the stock or whatever instrument. This is a chart of Bitcoin, US dollars, and you can ride it all the way higher. So this pattern is actually very useful to help you spot a bottom in instrument or a stock, and it does help you to have a very powerful trading strategy. So this is part of the trading strategy series. If you want to learn more about trading strategies, do like this video and subscribe to my channel, because I'm going to be posting quite a lot of trading strategies to empower traders and technical analysts around the world. My goal is to train 10,000 traders to be able to make a living in the markets. And also, if you'd like to learn more about trading strategy, please scroll to the description below where I list quite a lot of trading strategies. You can pick and choose and try and paper trade them and see whether it works for you. So let's talk about why we want to trade breakouts. Okay, now number one, it is quite easy to actually spot a breakout. It is not difficult at all, because the stock will either be trading sideways for a period of time or just declining slightly, and then eventually it will break a channel or sideways trading, and that is when you want to buy the breakout. It's quite easy to spot the breakout. And secondly, breakouts can often give you very great risk to reward ratio. Sometimes you can get a reward of 3 to 1 risk, and there are times when you can get 10 reward compared to 1 risk, which means if you risk 10,000, you can make 50 to 100,000. Now it's not something that is beyond reach. It is possible to do so, and because of the great reward to risk ratio, you don't need a high winning percentage to be profitable. You don't need to believe people telling you have to be 80-90% winning rate. If your risk to reward is 3 to 10 and your winning rate is 50%, you will still come up ahead in the future. So I hope you're excited about this, and if you like the way to make money by having strategies that have great reward to risk ratio, do like my video, subscribe to my channel, and whenever in the middle of this lecture you don't understand anything, just type something in the comment below, ask a question. I do read the comments, I answer to my best ability. Now, why trade cup and handle breakouts? These cup and handle breakouts actually often appear at bottoms, and when the pattern appears, some of them are really big movers, multi-year movers, some of them. This is popularized by William O'Neill, the founder of Investors Business Daily, where he wrote a stock about how to make money in stocks. So where he studied hundreds of, perhaps even thousands of winning stocks over the years, and discovered that cup with handle pattern after it breakout is one of the patterns that big winners display. And the handle is actually a consolidation breakout. Later I'll show you what the handle is, and it's actually a breakout, consolidation breakout, where you break out by the breakout of the handle. Alright, what is a cup with handle? Here is what it looks like. First of all, we have a correction. The stock corrects and then it bases, and then there is a positive move upwards. Eventually it forms a sideways consolidation, and then it breaks out. So this is the cup and this is the handle. It's quite easy to spot because the stock just corrects base, moves up and consolidates. Your job as a trader is to buy the breakout and ride it higher. So how do we trade the cup with handle breakout? First of all, you must make sure you have a valid cup with handle. But of course, you have to be very flexible because some cup with handle patterns do not follow the textbook. Alright, you have to have enough experience to be able to spot the varieties of cup with handle. And then you buy the breakout above the handle. And you put a stop loss below the handle. And to capture the profits, you use the 20-day moving average to ride it higher. So this is what a cup with handle pattern looks like. I'm sorry about my drawing, but you can see that Bitcoin here, this is a daily chart of Bitcoin. It corrected and then formed a base, a positive move up, and then a sideways trading. Alright, this is the cup and this is the handle. And how do you trade it? You buy the breakout, you put the stop loss below the handle. It helps to draw a box or rectangle over the handle, and then you ride it higher and it moves higher. And this is a chart of Airbnb. You can see the stock correcting, and then trading sideways up, form a base, and then positive move up, and sideways trading to form the handle. You buy the breakout, put a stop loss below the handle, and ride it higher. Right? And this is a chart of AIG, American International Group. You can see that it rise and then have a nasty correction. Then it form a base and a positive move, and traded sideways. And you should be buying here, putting a stop loss. Of course, it's going up at this moment. I don't think this trade has ended yet. Still have legs to go. Now, how do we set a target for this breakout? First of all, you draw the cup and then the handle, and then you take the height of the cup from the base to the handle. Right, this is the height, and then you project it from the breakout to get a possible target. Now, please take note here that there are many times that the stock can rise much higher than the target. This is just an initial target. Sometimes can go 3, 4, 5, even 6 times more than the target, hence the great reward to risk ratio. And how do we take profits? Of course, when dealing with breakouts, you have to let your profits run, and a stock that is strong will rarely drop below its rising daily 20-day moving average. So we take advantage of this knowledge and sell half of the stock when it drops below the 20 MA, and sell half when it drops below a swing low. Don't worry, I'll explain it to you later with examples. Now, so far, if you feel that you have learned something and this is a trading strategy that can help you make profits in the market, do like my video, subscribe to my channel, because it helps with the algorithm. And also, any questions, feel free to just drop a question in a comment below. Okay, we're going to look at some examples. We're going to go to the charting site and pick out some examples. AMGN, MGen, AMP, AVY, American Express, Boeing, and of course a bonus, Facebook, Meta. Alright, here is the daily chart of MGen. You can see. Can you spot the cup with handle? Actually, I've given you a clue here. So the stock rise and had a correction here, form a doji, a long-legged doji, and then it traded sideways. Let's draw the handle. So correction, base, positive move, handle. So this is the cup, this is the handle. You can buy the breakout, put a stop loss, ride it higher. And this is the 20 MA. You take profits when it breaks below the 20 MA. So that's one way to use the 20 MA. Let's take a look at AMP. Alright. Look at the big rise from here to here. Can you spot the cup with handle pattern? Okay. So the stock had a decline, and here it went down, base, positive move, and then traded sideways. So this is the cup, and this is the handle. Let me just draw the handle so that you can see clearer. Alright, and let me just draw something. This is the this is the cup, and this is the handle. Alright, so how do you trade this? You buy the breakout, put a stop loss here, and ride it higher. Using the 20 MA, your first take profit will be here, and then here's the swing low. It has not dropped below the swing low here, so you continue to ride it higher, and when it drops below this 20 MA again, you take the second profits. So let's, for the sake of now let's take a example here where you long the stock. Long means buying the stock, and let's say you take profits around here, the entire amount you sold around here, for example. Right, your risk to reward ratio is 7.85. That means for every 1,000 you risk, you stand to gain 7.85. So this is just an example of how powerful the cup with handle pattern is. Let's take a look at AVY. Okay, can you spot the cup with handle pattern? So stock traded sideways, decline, form doji base, positive move, trade sideways. Let me just draw the rectangle for you to see. Alright, this is the cup, this is the handle. You buy the breakout, put a stop loss, ride it higher, and when it drops below the 20 MA decisively, you sell half. This is a swing low. It hasn't dropped below this swing low. You continue to ride it higher until it drops decisively below 20 MA. So that is how you trade it. Alright, let's take a look at American Express. So can you spot the cup with handle? Alright, don't know whether you can spot it or not, but let me just draw the handle for you to see. Sometimes you have to be flexible. You have to know where to look. So the decline here, and then the stock decline, base, positive move, and this is the handle. Can you see? This is the cup, and this is the handle. And you buy the breakout. You ride it all the way higher, sell half here, and then this is the swing low, and you ride the other half up until it drops decisively below the 20 MA again. You know, sometimes when you're so much in the green, you can don't sell it too fast and just learn to ride it higher until the stock drops below at the next swing low. Let's take a risk reward ratio. Let's say you open a position here, your stop loss is around here. Let's say you are still riding the stock, well, it's here. So what is the risk reward ratio? 15.92. Let's say you hold the entire amount until you sold it off here. So for every 10,000 you risk, or you stand to make 159,000. Every 1,000 you stand risk, you stand to make 15,000. So it's a very powerful example, you know. Now let's take a look at Boeing. Right? Can you spot where is the cup with handle? Alright, where is the cup with handle? Yep. Let me just draw the handle for you to see. Alright, this is the decline, form a base, positive move, sideways trading. So this is the cup, this is the handle. Now, I always tell you, you need a bit of experience to be able to spot it, but when you do so, right, it'll be easy. So traders can buy the gap up, put a stop loss, ride it higher, and you'll be selling half of it here. Sometimes trades are not perfect, but at least when you gap down, you're still far away from your buy point and you have sold off everything here. Now, let me just show you the chart of Facebook. This is a bonus, but I want to go to the monthly chart. Alright, when it was first trading, you can see that it had a drop here and then a sideways decline. Right? Sometimes the handle can decline sideways to form a down channel. Right? So this is the cup, this is the handle, and you buy the breakout in the monthly chart, and look all the way it rise until it drop below the monthly 20 MA. But you can see how powerful it is. It works for long-term trading as well. So if you're an investor and you learn the cup with handle, it's a very powerful thing. Remember I told you that William O'Neill did a study of biggest winning stocks in the past 100 years or something like that, and he discovered cup with handle pattern appear in these big movers. So we can see this cup with handle pattern appearing in Meta, the parent of Facebook. So I hope that you have enjoyed this lecture. Right? I don't speak very fast. I'm not very good at speaking, but I do hope that my lecture has brought new knowledge to you. It has opened new dimensions into trading and technical analysis to you. But here's the conclusion. You have now learned a trading strategy that follows the trend. Remember before the breakout that it was a positive move, and that is the start of a new uptrend. So you're actually catching the trend, the uptrend. You have also learned how to catch a bottom in stocks. Very powerful stocks can often form the cup with handle pattern. So you have learned a way how to catch a bottom in stocks in the safe way. And you have also learned a good risk to reward strategy. Sometimes it can give you 3, 5. In the example, there was one that gave 15, right? And you need to paper trade. Don't just listen to my ideas, my lecture. You need to put this knowledge into practice. And the best way is to paper trade, not risking real money, but fake money. Let's say a 100,000 account, and you risk 10,000 in every cup and handle that you can find, and see whether it works for you or not. So don't just take my word for it. So I do hope that you have learned something. Once again, if you find this lecture helpful to you, do like my video and subscribe to my channel for more trading strategy like this. And for any questions, just feel free to comment in the comment section below. So thank you so much for watching to the end, and I'll see you in the next one.